Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good afternoon, everybody. I thought that just given the circumstances with Bitcoin dropping really fast and with just a lot of pandemonium and fear and bad news coming out of everywhere, I thought it might be a good idea to look at the worst Bitcoin crashes in history. And I just narrowed it down to the top 3 worst one-day crashes in Bitcoin's entire history. So from a percentage standpoint, so the chart on the bottom right corner is our current price. So we had 2 days. It took us 2 days to really drop, but our big drop was officially yesterday. Well, not yesterday, but the second day. So the second day we dropped 14.16%, and it represented the selling climax of this drop. So now let's look back in history and see what happened and just talk through the market psychology of the last times that this happened. So in 2012, it was the first time that Bitcoin ever made it to the high price of $16, and it hit this high and then started coming down, and we had a 30% drop in one day. And the interesting thing to note here is that it is kind of what happened next. So when investors see their portfolio just melt away, what is the response? Well, it has to bleed, it has to finish, it has to get to that climax, and then there has to be a market reaction. And I'm more interested in the market reaction. So at this point, we had a bounce above the 50% mark. So this move up was higher than the middle point, just barely. And it represented this kind of relief. And did we immediately go back up to the top? No, it needed time. But excuse me, the bulk of people were still on board with the bullishness of Bitcoin. Found a little bit of support higher than we were, and then we were able to kind of march our way through. It took us a bit of time before that peak was broken. In fact, we attempted it. Let's see how many days this would have been. We attempted it 120 days later. So these things are not fast, but there's different, there's a different psychology happening in the market. But then it was able to move on to bigger and better things. So now let's look at 2013. So 2013, we had this amazing run all the way up to a high of $259 for the first time ever. And after we got to a buying climax, we had a giant red candle. The low was really low, but our high percent drop was actually the next day, 48.52%. And I think this is the worst percentage loss in a single day that Bitcoin has ever experienced. So in 2013, it was April 11th of 2013, it was a gigantically devastating drop. We had some fundamentals in place though, some other technicals at play. We were holding above the 50, which is pretty awesome. But look at what happened next. So what happened was we had an attempt. We had finally our first green day after this bloodbath, but the bulls were not able to carry it past the midpoint. So the midpoint created a bit of a bearish situation, and we attempted, failed, had a couple of days, and eventually lost faith, and we actually dropped back down to our 100 moving average before trying again. And it took a second attempt before we were able to kind of get past that midpoint. And then there was some oscillations that happened, and this took time as well. So let's just kind of zoom out a little bit. In this case, there was a lot. It took us a lot to get back. So let's see, let's measure this out. From this top here, it took us about 200 days, 209 days to get there. There's an argument obviously to be made that this was way overbought and this was sort of a recovery. So these two gigantic drops happened at the tops of markets, and there's just a little bit of a different psychology going on, even though I'm mostly interested on what happened over the next couple of weeks. Like how did it go? And what the point I'm trying to get at that these two examples show is that after a selling climax, do we expect more immediate dramatic downside? Not usually. So when things drop and things look horrible and there's nothing but bad news and everything's, the market has been disrupted, we are, after that selling climax and we finally have a green candle, the majority of the emotional move is done. And then there's kind of a recoil and kind of a sideways reconstruction. We have to build support and resistance, and we have to figure out what's going on. Almost always, though, it becomes a wedge. The strong moves kind of oscillate, get tighter, and then finally we have time to make a decision and decide which way we're ultimately going to go. All right, so now let's look at the COVID crash. This giant red candle happened on March 12th of 2020. It was when the stock market sold off, and it happened at the bottom of a bit of a downturn. So we had actually lost the 50. We were trading below all three averages, and then finally the big thing came. And this situation is quite a bit more in line with our current pulse, because we'd kind of had a climax, we've come down, we were sort of faked out with this one, and then things were starting to look bearish, but we're just kind of blown out of the water by this move. So this move was negative 38.98%. So it wasn't 48%. I mean, this is unbelievable, but the market is, this is pretty significant. 30, almost 40% of a move all in one day. And at the bottom of this insane move, we finally found a green candle. And in this case, the green candle definitely was below our midpoint. And so we had to kind of oscillate and figure out what we were doing. But I think that because we were at the bottom of a bearish move already, it was pretty clear that this sell-off was an overreaction. And so we started climbing up, and we still had our scares and things like that, but it took us less time to get back to the top of that, because there was just we had already kind of been through a little bit of a downside. So now let's look at our current scenario. Well, let me zoom out anyway, so you can kind of see. It did kind of move us up and out. So it's interesting that the three examples that we have, eventually, it did take time, but this generally is the kind of focal point of the move, and then things got better. So if you were to, given that information, and just me as a trader and living through every one of these, I experienced every single one of these on Bitcoin. This move down was very, very dramatic. It was very full of emotion and drama, lots of news and everything. And I'm looking at this. Do I think that this is going to spur off a huge emotional sell-off? That's not how fear and greed works in a market. Fear has a climax, and fear is generally baked around the unknown. Once the unknown is out there, the fear it's dissipated. And we know what this move was. This was FTX and all of their pieces and parts, the spider web of connections and influence that had. We know that they're bankrupt. We know that money was stolen. Like, we know what happened. And so we finally get our green day. The green day is past our midpoint. So number one, we have a selling climax in play, and we have information from the market that the bulls are more optimistic that this is an overreaction than we had in some of these past experiences. This would be the only argument to say that here we barely passed the midpoint, and we kind of got faked out a little bit on the upside, but then we gathered our strength. The rest of these kind of fell off immediately and then climbed back. So what's happening here? We have a move past the midpoint, and then we have a little bit of a red day, and this red day kept us away from the midpoint of our green candle. So now we have a red candle that has been 50% or more has been overcome, and from the bear side, a drop. The bears have not been able to drop it below the midpoint of here. So this is actually, even though it was a red day, it's a sign of weakness. And from an emotional standpoint, I would rather see a weak bear move than a weak bullish move. If this had been a small green candle, I would have expected a couple more days of downside. But what we had is an immediate reaction from the bears, and they've proven in the chart by their purchasing power that they're out of gas. And so the next move, especially with this smaller weak candle, the next move will be to the upside at some point, and we will likely do an oscillation. And so because this trading range was such an important part of our last 130 days of trading, it is most likely that we'll probably capture this and oscillate and kind of figure out what's going on. This will be a point of resistance probably for our oscillations. But is there more emotion baked in here? Is there more fear that's going to come out? And I just don't think so. Let me do this before we get too far, and let me hide this so we can actually see. But let me measure this move, and granted, these are one-day moves. This is a two-day move. I'm going to just measure from the top of this down to our bottom here. So 22%. So a lot of emotion, but not even between the 2 days. It wasn't as strong as each of these days. So there are some differences here. But I think that the overall lesson is the same. Greed and fear drive markets, and fear happens in bursts. Greed is a slow burner. So usually what happens, and this is a pretty good chart for greed. You put in a buy and you start making money, and so you get excited and you put in more. And then you get your friends and you're bragging about it to everybody, and you're telling them how much money you're making, and they don't want to miss out, so they buy, and then they start making money, and so they put more in, and volumes get higher and higher, and more money shows up, and greed kind of builds on itself, and it continues to build. It can reach a climax, which this was more of a perfect case for that, because people are like, oh, it's going up so much, I'm going to put more and more in, and people buy until it reaches this breaking point. Well, so in other words, greed is more slow. It's more slow, and it's bragging, and it's talking to friends, and it's adding more, and it's overconfidence that kind of builds over time. Fear happens all at once. Fear is very, it's a stronger emotion. And so greed is a little slower, fear is faster. And that's why it's really hard to protect against downside exposure, because the fear happens so fast that people make decisions without thinking. And especially after a large drop, when balances are down and the whole world feels like it's upside down, it's really hard to think clearly. Everyone's like, oh, it's going to go down forever. And that's what everyone thinks simultaneously. When evidence is that even though fear happens faster, it's also over faster. At the end of fear, it's like it wears itself out really, really fast. So it's like greed is the fuse, and the explosion is the fear. And then it starts over again, and greed comes back into play. So, and this is only true really for these major events. It can happen also on the other side, when good news comes out, like Elon Musk announces that Doge is going to be, part of Twitter or something. Guaranteed that day, without any ability to buy in before, the price will just shoot up. And then once it's already up, that's when everyone's going to go, oh, you know what? I think I'm in a hurry and get in here. But the move has already been made. And so that it can happen on the bull side, but it's usually spurred by something. In crypto, or when projects are on the rise, it's kind of more of a slow, gradual move on the upside. So let's now look a little bit more broadly on our current market. So we have experienced plenty of downside, and we've already had a serious consolidation to the downside, and we've had this final selling climax. We've had several selling climaxes. This one was one, but it didn't amount to much because the tail was so strong, it kind of kept us sideways. These that ended very low, there was a climax, and then we kind of recovery. This you'd argue is a climax. This one you would argue is a climax. But once we finally get to the bottom of this, and we finally have a strong green candle, we've kind of projected to the market that we're out of fear. And I think that we're seeing the same things. Every time the market drops, the risk reward improves, and smarter money is more likely to snatch up prices down in this range. So the lower we get, the chances become stronger and stronger that we are at or near a bottom. And when you get a nice solid selling climax like this, there's just a really strong case that we will likely move on from here. And moving on from a selling climax at the bottom of a bear market has me excited. It's the probability of moving up from here is gigantic. The risk reward right here is gigantic. So there's just, it's easy to get swept up in the fear, and there's plenty of talking heads and lots of YouTubers or news outlets that'll sit there and they'll kind of rub this in your face. They'll tell you all the reasons why they knew this was coming and everything else, and nobody knew this was coming. No one did. And so don't get swept up by people thinking that that because this happened, there's more downside, or because this happened, that there's another series of events that will cause more damage or whatever. I'm just not on board with it. The fact that we only dropped this far is unbelievable. If the news had come out and we were back up in this area, it would have been much more dramatic. Like the move would have went higher because our risk reward was worse. Now that we're here at the bottom, even though it was pretty dramatic, it was not as impactful as you would have expected. And it's because there really is smart money watching the bottom here. And there's a lot of money down here looking for opportunities. And when a sale presents itself, they're going to take advantage of it. And so the couple of moves that we've seen in response to this are evidenced by the price movement. So the weekly, I wanted to kind of go over to Ethereum and talk about the weekly, because in a day and 5 hours, we're going to be closing our weekly candle. And at this point, Ethereum is risking making a lower low than our recent swing low on the weekly. That number is 12,077. And the other thing that we do not want to do is lose our 200-day moving average. The 200-day moving average on Ethereum is sitting at, I've got to pull down my thing here. It is at 1328. And our declining resistance that we would love, I can't even tell you how bullish it would be if we broke through this declining resistance and found support on it. That number is right here at 1360. So can we recover to 1360 on Ethereum? Well, Bitcoin and Ethereum have been moving pretty similarly. And in this case, Ethereum has actually shown more strength. So this green candle was way higher than our midpoint, and our weak bear move was very bullish. It was almost a dragonfly doji. It's very, very bullish. And to have a day where we kind of pull back a little bit is totally fine. Where the rubber hits the road is a day and 5 hours from now. If Ethereum can turn around, and it would be very likely for this to happen because we've already had a few days for the bears to kind of vent themselves a little bit. We have one day that pops us up to the 200 or above this line, and suddenly we're still in the game from a weekly standpoint. I think the chances of this happening are pretty good. So anyway, I'm very excited about Ethereum. But I also feel like, the entire market is not, I just don't feel like it's going to completely die in a hole. The alts are getting killed though. If you look at others' dominance, it has been falling pretty good. So they've definitely taken a back seat over Bitcoin and Ethereum during this kind of most recent move. But like I say, the second they start showing strength, these will pop around. So yeah, if you zoom out, alts have been in a kind of a situation. But here's one final thought, and that is looking at the total market cap. So if I move out to the weekly on the total market cap, it's pretty clear that even with these most recent moves, we have changed trajectory. The intensity of our downward movement has started to calm, and the more time that comes along, the more this starts becoming a Wyckoff accumulation. This could be a weekly spring event where we've moved sideways and we had this kind of move to the downside. If it's followed by a move to the upside, we could be out of the bottom of our bear market. So lots of interesting things developing. I'm really enjoying watching it piece by piece, and it's very fascinating to see how this bear market's going to unfold because at some point the bottom is in. At some point we're moving to higher levels. And so what shape does it look, will it take, and how will it present itself? That's all to be determined. And it's fun to see as it comes out, candle by candle, how this thing is going to print. All right, we will wrap up there, and I won't be doing a video tomorrow, so I will see everybody on Monday.
Thanks for making it to the end of my video. So just remember, keep your trade small, be patient, wait for the trade to come to you, don't get caught up in all of the hype. You guys are gonna kill it.